My name is David Brooks, a licensed financial professional. Today I'm going to be talking about what's the difference between fixed and variable universal life insurance. People like universal life insurance for liquidity, the ability to access their money when they need it, for safety because of the safety of the institution, and because it's backed by the multi-trillion-dollar insurance industry and is rated the safest place to put your money. That is why this is where banks and credit unions put 30 to 40% of their tier one assets for liquidity and safety. It's also where a lot of pensions are invested. During the Great Depression, some real estate dropped 80% in values. Banks closed their doors. 40% never opened. But guess how many legal reserve insurance companies went under during the Great Depression? Zero. They came through with flying colors, even paying their clients between 2.5 and 3.5% interest. In 2008, when we had the economy was bad in 2008, there were 400 banks that went under. And guess how many insurance companies went under in 2008? It was zero again. It's because the legal reserve insurance companies cross-insure each other. And they have the legal reserves required on hand, and most insurance companies do. Those reserves are more stringent than the banks and credit unions have on hand. That's why in 2008, the federal government asked the five major banks to disclose where they had their tier one assets for liquidity and safety. And guess what? They had 30, 40, and guess where they had 30 to 40% of their assets? In BOLI, which is bank-owned life insurance. And then the major corporations have theirs in COLI, which is corporate-owned life insurance contracts, because they know they can borrow our money and pay us 1%, but yet earn 5 or 6% from the insurance companies. So they're basically getting 5 times the rate of return. So say the banks can earn 5% and pay us 1. So say you put $1 million in the bank, they're going to pay you $10,000 in interest, or earning $50,000 in interest from the insurance company. So they got a $40,000 profit. And the insurance company does with their money, they take their money and they earn more interest. Some of the legal reserve insurance companies will have their assets. That's the money that you have deposited into what you call the general account portfolio. They will diversify that money into very conservative investments that are liquid and safe. They may put a large portion in AAA or AA bonds. They may have 15 to 20% of their portfolio invested in mortgages, shopping malls, skyscrapers, but they only loan about 40 to 60%. And insurance companies don't loan 80 to 90% of the value like the mortgage companies and banks do. Many insurance companies manage billions, even trillions of dollars. The insurance company's general portfolio is usually yielding about 5 to 6% with mortgages. And when interest rates are high for borrowing, they are high for earning. And when interest rates are low for borrowing, they are low for earning. That's called the general account portfolio yield. So if you have a fixed universal life insurance policy, that means you're just selling for the general account portfolio rate. The last decade, it has been between 4 to 6%, depending on the company which you have your money with. But how does variable universal life work? So variable came out in the 1990s because people wanted to participate in the stock market, which can be risky. You are taking the excess of your premium and putting it into the market, but you also have to have a security license to sell those policies. The advantage is if the market goes up 15 to 20%, you're doing great. But what happens if the market goes down 40% like it did in 2008? Then you lose big. So that's why it's best to have index universal life, where you can take advantage of the upside of the market, but you have a 0% floor. That means you never lose when the market goes down. So if you like to see if you can take advantage of the index universal life, then just reach out to me and just message me IUL for Index Universal Life, or just book an appointment on a calendar. And so that's my tip for today. And you guys have a great day.